Hi there, guys. For those that are still busy with sort of with their financial plan, this is just a brief overview of um, of what is required and the requirements, or at least what I'm looking for. So, very quickly, let's have a look at what the POE actually asks you to do. Let me skip through to that particular section. So part 3, and then the POE starts. So the POE says that it's important that your business plan consists of do not contradict yourself. Before you start, attractive logo. Remember, your business plan must be developed to respond to a challenge in the problem. So let's have a look at the financial plan portion of it. So the financial plan portion of it reads, it says, provided that you have received 250,000 Rand startup funding, prepare a forecast where costs associated with required business resource are outlined, and create a budget for the first 2 months. So I said 12 months. Calculate a break-even point. NB higher amounts will be accepted. And remember that to stick to figures that you can understand. Also include the cyclical nature. So what does the cyclical nature say? If you have a business that has a sort of a tourism aspect to it, or you have a business that has some sort of seasonal aspect to it, then you need to consider that. And that's why I like the 12-month sort of projection, because it gives you a sense of a season. So if there's certain seasons, or there's certain times in the year when your sales are going to be more, or certain times of the year when your sales are going to be less, and that will impact your profitability of your business. So that is what the requirements are. To calculate the break-even point, you need to prepare a statement of profit and loss. So if you look at what I have put down or given you as part of the template, let me just open that up quickly. So this is the template that I provided you with, and let me skip forward through to the financial section of it. Pricing. So it says you've got 250K startup funding, and then this is just a description of it, the same as it. So please make sure that you delete this. So setup costs. So here's the first one is setup costs. And in here, what I'm looking for is sort of what is required for your business. So think of your business. So if you're starting a restaurant, what type of setup costs will there be? If you're starting an app, and you're developing an app, what type of setup costs will there be? There might, like a restaurant that's got fixtures, fittings, tables, and all of those type of things. Whereas a developing an app, there's completely different setup costs. There might be different computers, and there might be certain software that you need to buy, and so forth. So very much in line with your particular business. And I read through this section quite closely, because what it does, it gives me a sense of, have you really thought about this? Have you really put time into thinking through what is required to set up your particular business? What will your own contribution be? Will there be sort of a bit of money that you're going to put into the business? Where will that come from? Will there be property that you need? Are you going to lease that property, or going to take that 250,000 and to buy a warehouse? Is that a good decision to make? And then financial projections. This is where I wanted to include a bit of theory. Why is financial projections important? What is your own remuneration? And then underneath that, in this section, this is the basic income statement. This is where you're going to put your 12-month projection in. So what does that 12-month projection look like? So let me quickly share my screen quickly, and then we can have a look at that. share application. Go. So this is what I've prepared for you. So it gives you a very basic 12-month projection. It gives you your average selling price per unit. And that can be a revenue per subscriber. It can be revenue per customer. So if you got a service business, how do you calculate your cost per client for a service business? Then you'll have to look at a simple projection. So what you do is you then look at how much revenue you have per month, and then how many clients you have per month, and then you divide it by the amount of clients, and then you have your selling price per unit or per client or per subscriber. Then you will have to do a bit of sort of thinking and reflecting about how much it's going to cost you to deliver that particular service. Now, if you got a widget, if you're making a product or service or product, then you add up all the related costs. If you are delivering a service, what generally happens is that you take all of your costs related directly, not your overheads, your costs related directly to delivering that particular service. So a good example would be a restaurant. So a restaurant, you buy all of the foodstuffs, you buy all of the things to make up the recipes and all of those type of stuff. So that is the food that you make. And then there's also the wages of the of all of the serving staff and the kitchen staff and so forth. So those are all the related costs to serving the meal. But every meal is a different price. So what you tend to do is you take all of those costs and you divide it by the number of people that you've served for the month. And then you got your average cost per unit or average cost per client. Then you times your amount of clients, of subscribers per month. And then that is a calculation. You can see that is a particular calculation. So that takes your number there, times it by that, times by your average selling price, and then you have a simple sales income for the year, and then your cost per unit average is the same thing. It's also a calculation. It is your units times your cost. Now, this is a very, very basic income statement. It takes your selling price, that calculates your sales. You take your gross margin or your gross profit. You then calculate your gross profit. You then have your expenses, which is all of your overheads. Now, if you're running a restaurant, what is in overheads and what are those things which are related to you serving a meal? So anything that you must pay each month, whether you serve one meal, whether you serve 100 meals, those are overheads. If you're running an app, everything that you must pay each and every month, whether you're selling your service to one customer or to 100 customers, those are your overheads. You then include your net profit loss in there. And then the only thing you can then do is you can then start playing around with these numbers. You can start playing around with things like, is your selling price going to increase? Is your cost going to increase? Are you going to start selling more each month, progressively more? Or is there going to be a time in which you're going to start slowing down? And then everything else will then just calculate by itself. Again, everything in yellow is the stuff that you play around with, and those are the stuff that you change. And then right at the bottom, this capital expense is what we then call the things that what you're going to spend that 250,000 Rand on. So the capital expenses would go in there. A vehicle, possibly, computers, software, and so forth. So this is a very basic income statement that you will then include into your PE. It is your, let's just break this open. So break-even point is your average. So here you've got a bit of a break-even point. So how do you calculate your break-even point? So your break-even point is, let me just see if I included it in here. Okay, no, I haven't. So a break-even point calculation is simple. It is, let's see, B break even is your fixed costs. And remember, you've got your fixed costs from your spreadsheet, your fixed costs for the month versus, and that's also your overheads versus your selling price. And again, this is from your spreadsheet minus your variable cost, and then you have that per units, or you have it per person, or you have it per subscriber, or you have it per client. So that's selling price minus your variable cost over your with your fixed cost above. And that's all that you need in here. You will then have a little explanation. In order to run my business successfully, I need to have 100 clients a month. In order to run my business successfully, I need to sell 150 widgets per month. In order to run my business successfully, I need to have at least 50 subscribers to my app a month. And then you give an explanation as to why having a break-even point is so important in your overall calculations of the profitability of your business. I hope this session has been useful for you to be able to see what is required and what my expectation is. So good luck, everybody.